This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian shares tread water, with China reported to be aiming for a higher budget deficit of 4% next year. Investors in the US pile into AI stocks, driving the Nasdaq to a record ahead of this week's key rate decisions. Germany's election campaign finally gets underway, with Chancellor Olaf Scholz calling for massive new investment into infrastructure and defence. And in Paris, the Bank of France cuts its growth outlook as new Prime Minister François Bayrou looks to build bridges to heal the country's fractured government. Good morning, happy Tuesday. European futures pointing lower by 0.3% after losses across European stocks of about a tenth yesterday. It was a very different picture, of course, for the Nasdaq 100 stateside, and I'll unpack that for you shortly. The FTSE 100 futures here in the UK also pointing lower by around 0.3%. The Nasdaq 100 then knocking through a fresh record of the year, powered by stocks like Broadcom, which has posted gains of close to 40% just in the last couple of days. So the gains around the AI space continue, and that has lifted the Nasdaq 100, that tech-heavy index, of course. S&P futures currently pointing to now gains of 0.3% to downside of 0.2. I think there's something going wrong with the S&P futures, so we'll ignore that for the moment. Nasdaq 100 futures, though, currently flat again after punching through a fresh record yesterday. Let's flip the board and have a look cross-asset. We, of course, focus on the yield curve stateside and treasuries as we lead up to the decision from the Federal Reserve tomorrow, expected, of course, to cut interest rates by 25 basis points again. But will it be a hawkish cut? What will we hear from Jay Powell in terms of expectations building out into 2025? 4.39 right now on the benchmark 10-year. Euro dollar at 105, a little softer by about a tenth of 8%. Bitcoin also punching through fresh records at 106 now, 106,000 right now on your main cryptocurrency. $74 a barrel on Brent, up 0.2%. Let's check in on the Asian markets. You've had more selling pressure across the South Korean stock complex, but let's start broadly with the MSCI Asia Pacific, currently down 0.3%. Reports coming through from Reuters that there are now the targets set in place for the deficit and growth for 2025 out of China. The CSI 300 has fluctuated a little, currently just modest gains of 0.6%. The Korean stock story, the sell-off continues there, 2 straight days of losses, down 1.3%. Reports as well around Trump tariffs, or at least Trump removing some subsidies for the EV sector. That has hit the auto sector over in Korea. The Japanese yen at 154 as we look ahead to the BOJ's decision, of course, following the Fed's decision later this week. Now, let's get to the China data story. Reuters reporting that Chinese leaders have agreed to raise the budget deficit, and this is important, to 4% of GDP next year. Let's get more from Bloomberg M-Line strategist Mark Cranfield. Mark, what is your assessment of these reported targets being put in place by policymakers, traditionally not officially revealed until March of next year, and the market reaction as well, which seems at the moment to be a little subdued?
Yeah, indeed. I think if these numbers are going to be correct, the headline number of a 4% deficit will be slightly disappointing. We have seen a bit of a knee-jerk response in the terms that the market's a little bit higher, although they're already losing some of that initial bounce we saw when they reopened after the lunch break. But that's partly because they were having such a bad morning. So the markets were generally down. In terms of the CSI 1000, it was down more than 4% at one stage in early trading. It's recovering some of that. It's still in the red, but it hasn't fully recovered that. The thing is that this kind of a knee-jerk bounce will need quite a bit more substance to keep it going. And that's really what's been lacking with so many of these things as far as investors are concerned. They're not seeing a lot of meat here. The headline number itself is also slightly disappointing because the market consensus will for something more like 4.5% to 5% of a fiscal deficit for next year. So this number is not on the high side. It's towards the low end of the range. So once the dust settles, people might feel this is really not the shock and awe number that they were really hoping for. This was the time when people were thinking if we're going to get back into the Chinese markets, it's because they're really going to go gangbusters. They're going to do whatever they can to make it work. This doesn't sound like it on the surface. We still will need to see a lot more detail about how the money is going to be spent, what kind of areas. But the initial improvement here could wear off quite quickly once people realize that these numbers are not the big factor that they were looking for. Back in September, it sounded as though China was going to do whatever it takes to improve its stock market, improve its economy. And even the GDP number of 5% is pretty much in line with what we've seen for the last couple of years. Once again, it is not the kind of number that will set people back and think, wow, this really is the turning point for China. So there could be more information to come. And as you say, March is usually the time when you get a full rundown. But this could fade quite quickly.
Yeah, okay, so investors still looking for the kind of Chinese equivalent of the Mario Draghi moment, whatever it takes, and colliding with the reality. It's becoming a bit like Groundhog Day, isn't it, in terms of that dynamic. Mark, you talk about the push into March then, the need for more meat being put on the bones of this China policy response story. What happens then between now and March, given the expectation is we don't get the details until then?
A lot will rest on the central bank here. The PBOC have been doing a lot of the heavy lifting in terms of they've been lowering interest rates in various ways, whether it's through the repo rate, through the minimum lending facility. And they have been, certainly, the markets have taken it very well. Every time the PBOC steps up, says something positive, or does something to ease monetary policy, the response is generally good. They have said, most recently, just in the past few days, that they don't plan to do anything more until early next year. They may need to change that. They're much more flexible, and they've shown under the current governor that they're willing to take short-term moves. So it could well be, if this is seen as disappointing, we could get a nice surprise from the PBOC in the next few days that does a bit of easing to help the market. They haven't done so yet, but there's certainly a tactic which they have used a few times in the past few months. So traders, if there's a sense of disappointment, particularly by the time we get to the weekend, once the Fed is out the way, if Chinese markets still look a bit soggy, we can probably start to see some talk that the PBOC will help out with some kind of maneuver. The minimum lending facility could be the one that is cut, particularly the one-year rate. It's steady at the moment, but there is talk that it may be lowered in the near term.
OK, Mark, thank you very much indeed, always, for the context as we look ahead then potentially to the PBOC post-Fed for any additional action. Bloomberg MLive strategist Mark Cranfield on the key market response, of course, to that reporting around deficit and growth targets out of China. Let's take a broader look at the market then in terms of market sentiment and bring in Valerie Teitel, who covers all things markets for us, of course. Valerie, we saw the gains coming through for the Nasdaq 100 again yesterday, fresh records. What are we expecting in terms of a potential Santa rally into the year end, at least when it comes to the US equity market?
Yeah, well, Santa needs to have some AI chip demand in his bag to keep this equity rally moving forward. We have had now back-to-back record high closes for the Nasdaq 100. It has now surged 31% year to date, Tom. Now, a lot of this recent rally in the last few sessions was due to such a big surge in Broadcom shares. They reported earnings back on Thursday, but the share also jumped nearly 11% yesterday as well. It's taken this two-day rally nearly 40% for the share of Broadcom. They reported quite a decent boost in demand for their AI technology. If we flip on and just talk about how this rally has been quite narrow recently, Tom, one of the narrowest we've seen this year. It has been led primarily by big tech. That Mag 7 has been outperforming at the biggest margin in December so far that we have seen over a year.
When it comes to Europe, a different sentiment. We've seen gains across the European Stock 600 year to date, but talk to us about more recent pessimism in Europe.
Yeah, we're seeing it from the market and from economists. We got some downgraded revisions from the Bank of France yesterday. They originally saw the French economy growing at 1.2% for 2025. They shaved that down to 0.9% for the French economy for 2025. Now, for the markets, a lot of this pessimism, Tom, has been reflected in positioning in euro dollar. If we flip on and just take a look at the CFTC positioning in the euro dollar pair, has its most shorts since March of 2020. So this pessimism with traders positioning for it, a lot of it is happening in the FX space. So keep an eye on how Eurodollar trades as we get any more sentiment indicators from Europe. We have the German IFO and the ZEW survey dropping later this morning. OK,
Bloomberg's Valerie Teitel, markets reporter. Thank you very much indeed. On Germany, campaign has started in that country. Campaigning, of course, ahead of elections in February, likely February the 23rd. After lawmakers backed, as expected, a confidence motion pushed by Chancellor Olaf Scholz. Let's get more then from Bloomberg's Oliver Crook on the ground for us in Berlin. Ollie, where do we go from here then?
Yeah, Tom, I was sort of laughing when you read the headlines and saying that, the election campaign finally begins in Germany, because it has sort of felt like this election has been going on for a long period of time, but has not really officially begun until Olaf Scholz lost the confidence vote yesterday before the parliament, which he did after, a 30-minute speech. And really, even before the confidence vote, it felt like campaigning had begun, because everybody was out on the floor of the Bundestag, sort of laying out their stake, criticizing one another. This was a pretty vehement and pretty spicy, in terms of far as German politics go, debate, where we had basically, Olaf Scholz at one point talking about the FDP, the finance ministry, that he fired on November the 6th, saying that basically they were morally unfit to govern. You had Friedrich Merz from the CDU saying that Olaf Scholz is a failed chancellor. And then you also had the voice of the AfD, the far right, which has been one that is now impossible to ignore in German politics, one that has been ignored for a very long time, but can't be, with them holding about 20% of the vote. And the AfD saying that basically Germany's on the brink of collapse, that a vote for Friedrich Merz is basically a vote for war with Russia. So these were the sort of the rhetoric and the sort of temperature going into this no confidence vote. After he lost it, Olaf Scholz went to the president, Steinmeier, who then will dissolve the parliament, and that will really sort of set the stage for this election campaign. And later today, actually, Tom, we're going to actually hear again from Olaf Scholz. We're going to hear from the SPD at 2 p.m., where they lay out their party platform and basically what their agenda is going to be, what they're going to be campaigning on for the next couple of months.
OK, so an important day for the SPD as they lay out those policies. Look, everyone seems to be aligned in terms of the key leaders amongst these parties, Ollie, at least on the surface, that the German economy is facing a major problem, a major issue. What is the policy prescription that each party is laying out to address the challenge?
Yeah, and again, a challenge that was highlighted yet again yesterday when you had the German PMI data coming in on the manufacturing at 42.5, missing estimates, and again, just extending that streak of uninterrupted contraction for 2.5 years. But then also looking at the sort of surveys into next year, IFO released that, surveying companies across all the sectors. Every single sector is very pessimistic. Only 1 in 8 companies in Germany expects the situation to improve next year. A third of them expect it to deteriorate even further. That really heightens the sort of pressure point here on the economy, which is easily the number one issue for the economy here. What I think is interesting is that, we've now heard from the CDU. They haven't put out their party platform yet, but we saw it a bit early. They say they're basically not willing to move on the debt brake. Olaf Scholz wants to spend a lot more money. He wants to spend more money on infrastructure. He wants to spend more money on defense, and of course to preserve all that sort of social welfare that exists here in Germany. But if you look at the polls, what we're going to get basically no matter what in this next government is another coalition government. And that is part of the issue that we've had here in Germany, the ungovernability, because you have massive sort of disagreements between the CDU and the SPD on how to spend money, how to raise money. And that is all sort of staring into the other sort of elephant in the room that is sort of regardless of whatever happens in this election and who gets elected, there is the presidency of Donald Trump. We talked about this a little bit at the beginning, but as we sort of march towards Inauguration Day, Germany has been enemy number 1 for Trump in his first administration. There is a real question about how he intends to close that sort of trade balance gap. And for Germany, that is absolutely colossal, because that has been the engine for growth, exporting. And now the United States is the number 1 trade partner. It is no longer China, because they have pivoted away. So that is going to be something they're going to be dealing with very shortly when he's inaugurated president.
Yeah. Ollie, it's one of the startling stories, isn't it, of 2024, towards the tail end, the impact that Trump is having geopolitically across governments, across nations. We're seeing that in everywhere from Germany to South Korea to arguably as well what is happening in Canada now as well. Bloomberg's Oliver Crook on the ground for us in Berlin. Thank you very much indeed. And Germany's IFO Institute President Clemens Fuest will be speaking with us at 9 a.m. UK time to discuss the outlook for Germany's business environment. So do tune in for that. Always smart in terms of the views and a finger on the pulse of that economy. Now, to budget constraints and fiscal spending challenges causing political fissures in Canada as well. So from Germany, similar story to what is happening in Canada, or at least there are echoes of it. Canada's new finance minister, Dominic LeBlanc, has just been sworn in within the last few hours. Prime Minister Justin Trudeau's government has been rocked by the sudden resignation of Chrystia Freeland over disagreements on how to prepare for the incoming Trump administration. To my point earlier, let's bring in Bloomberg's Bill Ferries for the details. Bill, this is a remarkable turn of event in terms of the politics of Canada, and as I've said, mirrors something to some extent we see in Germany and South Korea as well in terms of the Trump effect. What is behind this rift then within the heart of politics in Canada?
Yeah, you're absolutely right that Donald Trump is also looming over this situation. We know there's been tensions between former Finance Minister Freeland's office and Justin Trudeau. That was bubbling last week, really erupted on Monday, and a really a kind of devastating day for Trudeau's government with her resignation letter in which she accused the government of going after expensive political gimmicks to help bolster the economy ahead of the Trump presidency that begins next month. Canada, of course, bracing for the potential of 25% tariffs on their exports to the United States. That has become a big focus of Trudeau's government, how to deal with that. But also the government has wanted to boost its popularity a little bit. That's at the core of Freeland's accusations. They've instituted a sales tax holiday. There was talk about mailing Canadians $250 Canadian dollar checks. And this all comes after the government reported a real blowout deficit number of over 60 billion Canadian dollars in the fiscal year ended March. That was more than the 40 billion, more or less, that was projected or promised by the government. So a tough fiscal situation there, turning into a very difficult political situation for Justin Trudeau.
Well, on that point, is Trudeau under threat at this point, Bill?
Well, he certainly is under threat. It's definitely a low point. We believe the government wanted to look for elections maybe second half, late next year. This may force them to bring it forward. There's increasing calls from members of his own party that he step aside, in addition to calls from the opposition. The next few weeks will be a critical part of that. We'll see if he's forced into calling those elections. His party still is the biggest bloc in the House of Commons, but they do not have a majority.
OK, excellent. As always, Bill Ferry's on the shock rippling through politics of Canada. Thank you very much indeed. Coming up, make a deal. President-elect Donald Trump says Ukraine needs to reach a deal to end the war with Russia. We bring you his comments next. This is Bloomberg. Welcome back. Now, President-elect Donald Trump says Ukraine needs to reach a deal to end its war with Russia, downplaying the value of occupied Ukrainian land. It is the latest signal he may push for a settlement that codifies Russian territorial gains.
He would like to have peace. He wants peace. Everyone's being killed. It's the worst carnage that this world has seen since World War II. I've had pictures of fields where bodies are lying on top of bodies. Looks like the old pictures of the Civil War, where just bodies are all over. Just if you saw those pictures, you'd feel more strongly about it. It's got to stop. And we're trying to get it to stop.
OK, for more, let's bring in Bloomberg's Tony Halpin. Tony, the incoming president says it has to stop. Does he give any details yet on exactly how he would attempt to bring this conflict to an end?
Good morning, Tom. Well, not really, no. He has said, and he repeated again yesterday, that he'd like to reach a deal to end this war even before he gets into office next month. And he did apparently indicate yesterday that part of any agreement might involve Ukraine having to give up some of its territory that Russia has occupied since the invasion. But that clearly will alarm Kiev, because they've argued all along that they're the victims of a Russian attack in this war, and that therefore they shouldn't be required to give up territory in order to protect their sovereignty. But also what they want to hear from the US is what kind of security arrangements will be made to prevent any repeat of Russia's invasion in the future. And so far we haven't heard anything from Trump on that.
And meanwhile, I mean, you put these kind of comments side by side with what we hear often from Russian officials, and there are certainly, at the very least, echoes in terms of similarities. What we're hearing from incoming President Trump, what we've heard from Russian officials. What is the response likely to be then from Vladimir Putin?
Yes, I think the Kremlin will be quite encouraged. President Putin has said repeatedly that he's willing to negotiate, but only on what he calls the grounds of present realities, which is the Kremlin speak essentially for, we have the territory in eastern Ukraine and we'd like to keep it,
Russia has already changed its constitution to incorporate those territories in Ukraine and claims them now as Russian land. So they'll be somewhat heartened by what Trump said yesterday, that the idea that Ukraine may have to give up territory in order to reach a peace deal. And they'll also be encouraged by the idea that Trump was opposed to allowing Ukraine to use ATACMS long-range missiles to strike inside Russia. That's something Ukraine says it needs to do in order to defend itself. And there are no such limitations on Russian strikes across Ukraine, which have been going on for months now.
Tony, give us an update on what is happening on the ground in Ukraine. There's been evidence, it seems, that Russia continues to grind out some territorial progress. What is the state of play right now?
Yes, Russia has slowly been advancing on the ground in eastern Ukraine across the whole of the front line, really, for some months. It's come at huge cost in terms of casualties, but Ukraine is on the back foot. I think they're recognizing that fact, and they are working hard to try and improve their defense. But a lot of that depends on the supply of weapons from the US and European allies. And if there's any question mark about future supplies of those weapons, then it will be very much harder for Ukraine to continue to defend, and Russia will gain territory and will be encouraged to continue fighting. And I think that's one of the issues. It's all very well to say both sides should strike a deal, but at the moment, Putin doesn't have much incentive to come to the table because his forces are on the move.
OK. Bloomberg Economics and Government Editor Tony Halpin. Appreciate your insights, as ever, on this conflict and what we've been hearing from incoming President Trump on Ukraine, of course. Coming up later this hour, we're going to discuss Germany's challenges with Sudha David-Wilp from the German Marshall Fund of the United States. And, of course, part of that challenge is linked to a lack now of cheap Russian energy and how to spend around defence as a result of Russia's invasion of Ukraine. So the two are certainly linked. That conversation coming up. This is Bloomberg. Welcome back. Now some other stories making news. Local officials in the French territory of Mayotte fear as many as 1,000 people have died after tropical cyclone Trudeau hit the archipelago off the coast of Mozambique on Saturday. Emergency crews have worked to rescue survivors with houses and schools destroyed and water, power and communications cut in what was the worst storm to hit the area in nearly a century. Donald Trump has lost a bid to throw out his conviction on presidential immunity grounds in the New York hush money trial. A New York state judge rejected Trump's argument that his trial was tainted by witness testimony. It's not certain that the case will proceed to sentencing as the president-elect continues to challenge the verdict. New York police are asking Congress to give local authorities the power to neutralize drones, following thousands of mysterious sightings over the US Northeast. The White House says a law enforcement assessment found nothing suspicious. President-elect Donald Trump suggested yesterday, without evidence, that the US military knew where the drones took off. And Morgan Stanley is said to be offering loans to SpaceX employees who want to cash in on soaring shares at the rocket and satellite maker without losing their equity stake. We're told employees need at least $500,000 worth of vested SpaceX stock to take part. The private startup's valuation recently soared to about $350 billion US dollars. Coming up, the Bank of France cuts its domestic growth outlook, citing the nation's political upheaval. We get the latest. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks treading water with China reported to be aiming for growth of about 5% and a higher budget deficit of 4% next year. Investors in the US pile into AI stocks, driving the Nasdaq to a record ahead of this week's key rate decisions. Germany's election campaign finally gets underway, with Chancellor Olaf Scholz calling for massive new investment into infrastructure and defence. And in Paris, the Bank of France cuts its growth outlook as new Prime Minister François Bayrou looks to build bridges to heal the country's fractured government. Let's check in on European futures then. Pointing lower after a little bit of softness, ending the session yesterday. European stocks off by about 0.1%. Currently looking to build on the downside then, pointing lower by 0.3% as we weigh up, of course, the politics of both France and Germany. Here in the UK, FTSE 100 futures pointing lower by 0.3%. Nasdaq 100 futures after punching through a fresh record yesterday, powered by the AI trade again, currently pointing to losses of just 0.1%. Let's flip the board and have a look cross-asset then. We, of course, zoom in on US Treasuries as we build up to that decision from the Federal Reserve tomorrow, fully expected by the markets to cut again by 25 basis points. The 10-year is currently yielding you 4.39. Euro dollar, little softer on dollar strength, 105 currently on the single currency. Bitcoin also breaking through a fresh record high, now above 106,000 per coin, up 0.3% so far in the session. Brent stabilising at $74, up 0.3%. Let's briefly check in on Asian markets, where the benchmark NSCI Asia Pacific Index is currently down 0.4%. Mainland China CSI 300 gaining 0.4%. Reports coming through from Reuters around the deficit target of 4% and growth aiming for 5% next year. We'll see if that is confirmed. Over in South Korea, further downside pressure. 1.3% is the drop on Korean stocks, and the Japanese yen at 154 as some traders speculate about verbal intervention around the softness in the currency. And of course, that could be determined by the BOJ and Fed's actions later this week. Now in France, switching focus from Asia to Europe, the National Assembly has unanimously adopted a stopgap budget bill intended to enable the state to keep functioning from January. To adopt a full 2025 budget, the new Prime Minister, François Bayrou, faces similar financial and political challenges to the previous government. But far-right leader Marine Le Pen says she left with a positive impression after meeting with Bayrou. For more, let's bring in Bloomberg's Phil Serafino on the ground for us in Paris. Phil, what challenges then does Bayrou have ahead of him? And did the meeting with Marine Le Pen and Jordan Bardella move the needle in any way?
You know, that was just the start of the process, Tom. He had several meetings yesterday after Le Pen. You know, those were preliminary. Now the hard work comes of trying to construct a majority that will approve a budget. That's what brought down Michel Barnier, the last prime minister. I think you're still looking at several days of discussions before he can have the outlines of, first of all, he needs to appoint a government, choose his cabinet ministers with Emmanuel Macron, and then put together a budget. So there's a long road ahead, and I think that those meetings yesterday were just the very first step.
OK, a long road ahead. Meanwhile, the Bank of France cutting its 2025 growth outlook for the country and pointing, at least in part, to the politics and the political instability right now in France. What exactly did we hear from the Central Bank of France?
Yeah, I mean, I think the role of central banks in Europe is to tell the politicians the things they don't want to hear. And François Villeroy de Galhau, the governor of the French Central Bank, was very explicit, both in his statement and also in an interview he gave last night to Le Figaro newspaper. He said, unless France solves this budget problem, there's a risk of gradual economic decline, which is not something anyone wants to hear. He also made the point that the solutions are easy, but are relatively simple, not easy to implement. France just needs to cut spending and raise taxes a little bit. He made the point France spends far more than other European countries on its social system, which is the envy of Europe, the healthcare system, retirement, and so forth. But they're spending 57% of GDP in France on those things, whereas the average in the rest of Europe is 48%. So France has been very generous financially, and now it can't afford to be so generous. That's a very difficult message to send to politicians, but it's one that Bayrou is certainly going to try and get across in these budget negotiations.
Yeah, historically, of course, a difficult message to send to the people of France as well. 57% versus 48. That is quite the gap. Bloomberg senior editor Phil Serafino, excellent in terms of the challenges, of course, facing incoming Prime Minister, or the new Prime Minister, of course, Bayrou, as he tries to align the parties there on that budget conundrum in France. Later this morning, we're going to be live at the annual Conference de Paris, which brings together leaders from business and politics to share their knowledge on ways to overcome the biggest global challenges, and presumably France will be part of that conversation. We're going to bring you interviews with the president of the Paris region, Valérie Pécresse, the chairman emeritus of Publicis Group, Maurice Lévy, of course, as well as the BHP CEO, Mike Henry. So definitely tune in for those conversations. Now, in Denmark, Novo Nordisk's rapid hiring spree is making it difficult for small businesses to find staff, leading some to close down. For more, let's bring in Bloomberg's Sudha Vass in Copenhagen. Sudha, Novo Nordisk then, the number one driver of GDP in that nation and job growth, of course, in Denmark. But it seems there's a bit of a downside to that.
Yes, I mean, Danish economy is doing well. Employment is at a record high, and of course that's positive for Denmark overall. But it's just not everyone who are feeling those benefits. Remember, Denmark is a small country. We're about 6 million people. And Novo Nordisk at the moment is on such a massive hiring binge that it's vacuuming the labor market for everything it can get. And it can get a lot because it offers attractive pay, good benefits, and it's a place people want to go to work. So good for Novo, but for companies that, especially those near where Novo is present and expanding, that's coming with new challenges. A lot are losing staff to Novo, and it's not just within the pharmaceutical sector. It's across the board. Armed forces, public schools, hospitals, auto repair shops, and not only are they losing staff, but they're also struggling to recruit because there's no one left. So we're seeing some businesses really feeling the pain.
Yeah, so a single company accounting for half of the GDP growth of an entire nation. Did you say auto parts makers? I mean, that's pretty remarkable. So what are the consequences then for businesses and for the Danish economy?
Well, it means that some businesses just can't grow as much as they would have liked to or would have been able to. We're seeing that businesses are having to turn down orders. Some are delaying expansion projects because the construction companies don't have enough staff. I've spoken to a company that had to move production abroad because that was the only solution to the problem. And yeah, as I mentioned, an auto repair shop that had to close down because he was simply exhausted from having to look for staff all the time. He was based just half a mile from Novo Nordisk. So unfortunately for those businesses, it's meaning less growth, but also for the Danish economy, it means that all growth is centered around this one company and now also at the expense of others. And of course, that creates some sort of concentration risk that could become a problem for Denmark down the road.
Yeah, and I wonder if Denmark's looking at Finland's experience with Nokia back in the day when you had that concentration risk as well. What are some of the solutions to this challenge then that are being considered?
Yeah, I think the number one solution that both government and also local municipalities and so on are looking at is opening up borders to attract more labour from abroad. And so we've already seen some initiatives easing restrictions, the opening of international schools and international colleges, expat tax benefit schemes. But this kind of approach is also a bit controversial in Denmark because across the political spectrum and also the Danish population, there are many people who don't want more immigrants. So there are really limitations also to how much the Danish government can open its borders. Denmark already has one of the strictest immigration policies in Europe for that reason. So in the meantime, Danish companies are really just left to figure out how they can attract staff. Some are engaging with their employees on pay and benefits to counter Novo offers. But sadly, we're probably going to see more examples of businesses that are struggling and maybe having to close down.
OK, Bloomberg's Sudha Vass in Copenhagen on today's Big Take and the lopsided impact of Novo Nordisk on that economy. Fascinating read and reporting. Thank you, Sudha. Now, Bloomberg research has found the majority of Britain's biggest listed companies will together account for less than 3% of the revenue raised by increased payroll taxes. Chancellor Rachel Reeves announced more than £40 billion in tax hikes, of course, at the end of October, controversially so. However, many blue chip companies have significant international operations and employ relatively few people in the UK, with the tax hitting smaller businesses like shops, pubs and other high street businesses. Now, top executives from companies including Rolls-Royce, Prudential and Legal & General are to advise the UK government as it devises a new industrial strategy to drive growth. They'll make up a 16-person council to advise ministers in the months ahead, with the first meeting later today. Prime Minister Keir Starmer says he wants to make the UK, quote, one of the best places in the world to do business. And Bloomberg has learned that CVC Capital Partners is exploring a potential purchase of Vivendi's stake in Telecom Italia. Sources say CVC is in initial talks to buy Vivendi's 24% holding in common shares of Italy's largest telco. We're also told the buyout firm may eventually seek a full takeover and try to break up the business. Coming up, we are going to be talking to Sudha David-Wilp from the German Marshall Fund of the United States as campaigning begins for Germany's February election. Stay with us for that conversation. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Germany heading for months of political deadlock as voters return to the ballot box for another federal election in February, and with coalition negotiations potentially lasting several months after that. Let's get some analysis then and bring in Sudha David-Wilp, Berlin Office Director at the German Marshall Fund of the United States, someone very well placed, of course, to talk about what to expect in the months ahead. Sudha, thanks for joining us. What are you going to be watching now that campaigning is officially underway? We have an election date, likely February the 23rd of 2025 for Germany. What will you be watching for between now and then?
Yes, hi, good morning. So elections will be most probably on February 23rd with the confidence vote yesterday. Chancellor Scholz did not receive a majority of votes. He only received 207 votes and he needed 367 to have a confidence vote. And really that was a very orchestrated play because the coalition that existed, the so-called traffic light coalition, had shown cracks for several months, and everybody here in Berlin was betting on whether the coalition would last the whole 4-year term. And so what will we be looking for? We'll be looking for whether the Greens or the SPD become the junior partner for the CDU, because Friedrich Merz, the leader of the conservative Christian Democratic Union, is in a comfortable position to probably be the next chancellor of Germany, but he requires a junior partner to establish a governing coalition. And right now, the party landscape here is so fragmented that it may also take 3 parties to establish a governing coalition. So we'll be looking for where the CDU overlaps with the Greens and the SPD in terms of party platform to see whether a coalition can be formed very quickly after the federal election on February 23rd.
And Sudha, what is your understanding? What is your best estimate in terms of how viable those combinations would be, in terms of how sustainable they would be? You talked about the vulnerability, of course, of the traffic light coalition that is now broken apart. How sustainable could these different political makeups, these different coalition scenarios, actually be longer term for Germany?
So Germany is facing a very different environment than the last federal election. There is a war on the continent. The country realizes it needs to spend more on defense spending, and also in light of a very uncertain transatlantic relationship. The German economy itself is sputtering. There's a lack of skilled workers, lots of a lack of investment in infrastructure and innovation. So there's obviously choices to be made about how Germany spends for the future. And there are differences in opinion, especially over the constitutional debt brake, whether that should be loosened. And the CDU so far and the FDP have said that they want to adhere to this debt brake. And the Greens and the SPD are for loosening the debt brake to spend more on military and social spending and climate initiatives. So this is where the conflict, or not, where the the backroom talks will have to happen after February 23rd. There is a lot of common ground in terms of foreign policy between the Greens and the CDU. They are very hawkish on questions about China and about supporting Ukraine, whereas the SPD is still very, very hesitant on defense spending for Ukraine, and obviously wants to make sure it caters to its base and lives up to its image as a party for the working class, and wants to continue social spending. So these are the issues that we'll see being hammered out after February 23rd. And for German voters, the topics of migration and inflation are still front and center.
Well, if we zero into the debt brake question, Sudha, and certainly for investors, that is crucial when we think about the long-term trajectory of Germany. You have the Greens and the SPD on one side of this debate then, but the CDU, the CSU and others on the other side. What moves the needle on a debt brake reform question that for many outside of Germany would seem pretty essential right now?
You're absolutely right, Tom, not just for Germany, but also for its partners, in Europe that are looking for Germany to play a leading role to elevate Europe's role in the world. And for that, Europe needs money to invest not only in innovation, but also on defense. So I think on the campaign, nobody, especially in the FDP and the CDU, will say that they're going to call for a debt brake, because a lot of German voters also want to make sure that parties adhere to fiscal responsibility. They're proud of not creating debt, and this obviously harkens back to historical reasons in Germany with the Weimar Republic. But during coalition talks, when parties are deciding on an agreement, there will probably be a move to loosen the debt brake. The CDU-CSU is unveiling its party platform today, and many economists are asking how tax cuts can be made and also fulfill all the ambitions to spend on defense. So I have a feeling that the debt brake will be obviously looked at during the coalition talks.
OK, interesting. Sudha, before we let you go, where are the dividing lines then between these major parties when it comes to how to respond to the threat of Trump tariffs?
So I think there's going to be a concerted effort to work with Brussels. Brussels has come up with a list of countermeasures, but Germany is, of course, going to want to salvage the transatlantic relationship, no matter who is in the White House. This country, its foreign and security policy is built on the transatlantic relationship, as well as good relations with the European Union. But the country is, exerts a strength in terms of its export muscle. So protectionism from the U.S. is not a good thing for Germany, and it's going to look to make carve-outs with the United States or take a tougher line along with Brussels.
Sudha, David-Wilp, Berlin office director at the German Marshall Fund of the United States, giving us some important analysis as campaigning officially gets underway in the German, of course, election campaign. Sudha, thank you very much indeed. We're expecting more details, as you said, from the SPD later today. You can catch our interview with Claudia Busch, ECB's Supervisory Board Chair, and Deutsche Bundesbank's Vice President, by the way, at 11:30 a.m. UK time to kind of add some views around the politics of Germany and the economic challenges of that country. So stay tuned for that interview. There's a lot more coming up. Stay with us. This is Bloomberg.
Expectation is that they will continue to do rate cuts in 2025. And I think the dot plot will show 2 or 3 rate cuts in 2025. But to your question, what would cause them to not just pause, but to stop? That'd be an economy that continues to do better than expected, inflation that's sticky, and the Fed revising up their estimate of what a neutral interest rate is.
OK, Bloomberg opinion columnist Bill Dudley, formerly of the New York Fed, of course, speaking to us there around his expectations for the Fed to cut into 2025 as well. 2 to 3 cuts is the expectation there. One of the metrics that the Fed will be looking at, it's not going to change the decision for Wednesday from the Federal Reserve, but it's certainly a metric being considered by officials as they gauge the health of the US consumer into 2025 is the retail sales data that will drop later today. And the expectation is you'll see a move higher, growth of about 0.6%. Bloomberg Economics saying that the strength in the stock market is a factor. The growth in wages as well is giving consumers that ability to continue to spend, particularly on big ticket items. And actually Bloomberg Economics saying that maybe consumers are going to be pulling forward some of those big ticket items in expectation that they could become a little pricier next year if you get tariffs put in place by the incoming Trump administration. So that's the expectation, 0.6%, which will be a relatively healthy number. And bear that in mind, of course, as we lead up to that print later today. Let's flip the board and have a look at what to expect from the UK, where we're going to get some wages and jobs growth data as well. Interestingly, as now markets price in increasingly few cuts from the Bank of England, not expected to get below 4% before November of next year. Markets pricing in just around 70 basis points of cuts between now and November of next year from the Bank of England. To what extent does the wage story and the unemployment rate tie into that? The expectation then is that weekly earnings over a 3-month period in the UK will have actually increased to 4.6% when the data drops later today from 4.3%. The unemployment rate expected to stay at around 4.3%. If you get those kind of numbers, presumably that will be more grist to the mill for the hawks. The MPC and the BOE saying and urging for caution, and certainly the market pricing is factoring that in. That data dropping shortly. We'll break that for you. On Germany, the German IFO data in terms of business sentiment, the gauge there around expectations at a time, of course, of political uncertainty and lackluster, if any, growth at all in Germany. That will be consequential. We're going to be speaking to Clemens Fust as well. So just bear that in mind in terms of the IFO business sentiment survey. Is there any bottoming out here, or do we need to wait until after those elections, February 23rd? And even then, of course, you could have weeks, if not months, of wrangling if you are looking at a likely coalition scenario in Germany. Now, at 9 a.m. UK time, we will be speaking with the president of Germany's IFO Institute on its latest business climate survey, so tune in for that, 9 a.m. Before we get to that, though, at 8:45 UK time on the opening trade, we'll be speaking exclusively with the president of the Paris region, Valérie Pécresse, at the Conférence de Paris, that's at the OECD. We'll also be live at the Conference de Paris, as we've been mentioning, speaking with a range of guests, so stay tuned for that. Maurice Levy, front and centre. Stay with us. The opening trade is next. This is Bloomberg.